Have you pondered the enigma that is Bitcoin? Market Matters Media presents a captivating journey into the world of digital currencies. Today, we'll unravel the mysteries surrounding Bitcoin, exploring its rise, controversies, and the conflicting views of two financial giants, Warren Buffett and Charlie Munger. Reservations about Bitcoin arose when it first gained attention. However, Warren Buffett and Charlie Munger held clear stances distinct from the reservations. The Bitcoin discussion initiated in early 2018, witnessing a 400% surge, while Berkshire Hathaway, renowned for financial wisdom, gained a mere 75%. The disparity between Bitcoin's success and experts' disdain is intriguing. A month of research yielded unexpected findings. Bitcoin emerges as humanity's pinnacle asset, surpassing all historical properties despite lacking intrinsic value. Predictions of its downfall contrast with its projected growth, from $1 trillion asset to $25 trillion by 2030, resembling a greater fool theory. Given the opportunity, one might consider shorting it. Its impact could rival the birth of the internet. Bitcoin is regarded as synthetic gold, essentially worthless. The juxtaposition between Bitcoin's remarkable potential and skepticism resembles a broader discussion in the finance world. While some herald its possibilities, others brand it as detrimental. The coin, intangible and uncontrollable, holds the potential to address long-standing currency issues but also presents significant risks. A balanced assessment acknowledges both perspectives. Understanding Bitcoin requires grasping the problem it addresses. Imagine being a 30-year-old in the US in 2020. You've saved $100,000 for a home and family care. But a pandemic strikes, prices soar, and your $100,000 dwindles to $70,000 in real terms in 3 years. This is the silent tax on responsible individuals like Ryan. This tax isn't unique to the USA. It plagues most nations, with worse consequences. In Argentina, using pesos, that $100,000 dwindles to $15,000. This isn't a hypothetical tale. It's a reality. Traditional currency has deep flaws. History shows it's a century-old problem affecting over 100 currencies. The US dollar loses 7 to 10% of its value annually for a century, resulting in a 99% loss. A Miami Beach house, for instance, bought for $100,000 in 1930, now valued at $50 million, isn't the house appreciating but the currency depreciating. In 1900, if you invested $100 million in any currency worldwide, except possibly the dollar or pound, you'd have lost it all. Throughout the 20th century, the United States emerged victorious in every war, yet the winning currency lost 99.5% of its value. Holding the wrong currency led to severe losses, but the problem was that nearly all currencies were the wrong choice. They were all controlled by central authorities that intentionally, legally, and quietly diluted their value. However, there's a new type of currency that doesn't follow this pattern. The concept of currency itself is sound, a means of exchange and a store of value. It's like a fisherman trading some of his catch with a lumberjack for logs. The problem arises from those who control the currency, such as the central banks like the Federal Reserve in the USA. They have a bad habit of excessive money printing, which devalues existing money in circulation. This devaluation affects both savers and non-savers. It seems like an unchanging reality, but there is a potential solution. Satoshi Nakamoto, an enigmatic figure, invented Bitcoin in January 2009. Whether driven by personal experiences with inflation, disillusionment with the traditional financial system, or a desire for wealth, Satoshi's identity remains a mystery. What's clear is that Bitcoin offers an alternative to the devaluation caused by centralized control, presenting a unique solution to the age-old problem of currency depreciation. A mysterious online currency emerges, designed to address the shortcomings of modern currencies. Firstly, it's decentralized, with power spread across millions of computers, making it highly secure. Second, it has a capped supply of 21 million coins, preventing inflation and safeguarding individuals like Ryan from losing value in their savings. Third, it offers instant, borderless transfers at the click of a button, an innovative concept. Imagine wanting to move your wealth to a safer country due to corruption or a controlling government. With this currency, a few clicks can transfer your assets anywhere, anytime. Alternatively, memorize your private key, and your entire net worth is stored in your mind. It seems like a remarkable invention, so why do financial experts like Warren Buffett despise it? To understand Buffett's perspective, consider his investment philosophy. He seeks stocks with reasonable prices, generating swift cash flow and sustained returns. His 2011 investment in IBM exemplifies this approach. However, he avoids speculative assets that don't generate income. Bitcoin, an asset producing nothing and existing primarily online, falls far outside his investing framework. Buffett prioritizes protecting shareholders' money above all else, making him wary of such unconventional investments. Charlie Munger is known for his straightforward approach to investments. When he believes in something, he goes all in, as seen in his substantial investments in Berkshire Hathaway and Costco. However, his stance on Bitcoin is clear, often referring to it as crypto crap and even rat poison. Munger's primary concern with Bitcoin lies in its perceived evil nature. While humans, systems, or cults can be considered evil, labeling a currency as such seems unusual. However, Munger's argument is that Bitcoin's anonymity has made it appealing to criminals, undermining its credibility. Criminals can easily use Bitcoin for illegal activities like drug trafficking, thanks to its decentralized and pseudonymous nature. The issue arises when illegal proceeds are transferred through traditional banks, which are heavily regulated and require documentation for large transactions, potentially leading to arrests. In contrast, Bitcoin transactions, while recorded on the blockchain, offer anonymity as identities remain hidden. This quality, which is one of Bitcoin's strengths, becomes its downfall, enabling criminal activities. Bitcoin's success is unique. Its value depends on how many people desire it. If no one wants to bond, stock, or farm, their intrinsic value remains. Conversely, if everyone desires Bitcoin, its value soars. This explains the fervent promotion by Bitcoin holders who rely on broader adoption to increase its price, particularly targeting institutions, large investors, and governments for mainstream acceptance. China's potential shift from holding the US dollar to adopting Bitcoin raises intriguing questions about its future. While some make wildly optimistic price predictions, let's consider realistic scenarios. Presently, Bitcoin has a market cap of $700 billion, while gold, another store of value, stands at $11 trillion. If Bitcoin were to match gold's market cap, it could experience a 15 times increase. Alternatively, one might argue that Bitcoin is superior to gold, warranting double its market value, which would result in a 30 times price increase. However, Bitcoin is relatively new, with just a decade of use compared to gold centuries. There's another less favorable outcome, one seen in the fate of many other cryptocurrencies. Bitcoin, while not perfect, is often viewed as a form of currency. In May 2021, Tesla, led by Elon Musk, halted Bitcoin payments, citing environmental concerns due to its energy consumption, which equals 0.55% of global electricity production. Coupled with slow transactions, high fees, and market volatility, Bitcoin becomes a cumbersome currency. El Salvador's experience, where Bitcoin was adopted as a national currency, illustrates these challenges, as businesses and individuals hesitated to use it due to its limitations. The reality is that Bitcoin has notable flaws as a currency, which could potentially lead to its demise. While some argue vehemently against it, dismissing it as worthless and harmful, others champion its potential to revolutionize the financial system. The dichotomy mirrors the political divide, with new financial influencers advocating for change while traditionalists resist. Unlike politics, Bitcoin might not have a middle ground. It represents a digital solution to long-standing currency problems, but also carries significant risks. It's not a black and white issue, and a balanced assessment acknowledges both its potential and vulnerabilities. In the complex tapestry of Bitcoin, dismissing it as evil oversimplifies its potential impact. Market Matters Media embraces the nuances, acknowledging the risks while fostering a dialogue on the future of currency and financial systems. If you found this exploration enlightening, show your support by liking the video, sharing your thoughts in the comments, and subscribing to Market Matters Media for more insightful analysis. Join us in navigating the complexities of our ever-evolving financial landscape.